Forecasts for the real estate market over the next 5 years. One's ability to foresee external influences influencing the housing market is crucial to making accurate housing market predictions. As the economy evolves, forecasting becomes more of a subjective art. Take a look at what some industry insiders think will happen to the housing market over the next 5 years. While some economists remain optimistic, even those who had forecast continued price hikes until 2023 have reversed course. By way of illustration, Freddie Mac's latest quarterly forecast calls for 0.2% lower prices in 2023, down from the previous quarter's estimate of 4% higher costs. As the Fed works to rein in inflation, experts are worried about warning signs in the housing market. Although the extent of the correction is unknown, analysts are watching the volatility of the housing market with concern. Zillow reports that the median value of a property in the United States is currently $357,589. Mortgage rates recently rose beyond 7%, which has had a devastating effect on real estate activity and consumer sentiment about the housing market. Home price rises stayed in the low double digits in October, and analysts predict that the pattern will continue for the rest of 2019 and into 2023. Since the housing market's spring peak, many localities have had to re-evaluate their strategies, and some are now expected to see losses in 2023. Nonetheless, additional declining supply, a slowing of mortgage rate hikes, and moderately upbeat economic statistics may help stabilize housing prices in the long run. Top economist Danielle Hale has predicted after several years of being a seller's market, 2023 may see more of a shift toward a buyer's market in the housing sector. Buyers may take heart in the 22.8% increase in listings, but sellers are having a harder time moving their properties due to stricter affordability standards. The yearly median price of homes for sale across the nation is expected to increase by 5.4% in 2023, which is half the rate witnessed in 2022. In the event that a homeowner chooses to sell their property, they will likely still have a substantial amount of equity. We predict home sales to be 14.1% lower than in 2022 as buyers and sellers retreat from a housing market and economy in transition. Home sales in late 2022 might be used as a proxy for annual sales in 2023. The annual increase in home prices across the country remained in the double digits, albeit it slowed somewhat from the spring. As a result of rising costs, there has been a shift in the housing market's balance of power. Predictions for home sales in the near future indicate that they will remain lower than in recent years. As mortgage rates increased dramatically in the third quarter, housing affordability deteriorated and annual home price growth stalled. In the near future, housing prices are predicted to fall even more due to rising mortgage rates, 7.08% as of this writing, which have led to a precipitous decline in demand for home purchases. We may see a decline in property prices in several markets within the next year. Experts predict that home values will fall over the next 12 to 18 months before stabilizing and then recovering. Home price appreciation over the next 5 years is expected to be anywhere from 15% to 25%, but is expected to be highly variable. As a result of a decrease in demand brought on by higher mortgage rates, homes stay on the market for a longer period of time, and price appreciation is slowed. Because of their reliance on current low rates, many would-be sellers are unable to move to a more expensive mortgage, thus decreasing supply. As a result of these rebalances, affluent buyers now have more options, less competition, and more bargaining power than in former years. Recent market shifts and persistent deterioration in the metrics' leading indicators are also reflected in the projection of 5.2 million existing house sales in 2022. As the number of prospective purchasers dwindled due to ongoing issues with qualifying for mortgages, the number of homes on the market grew with less competition. The property market has cooled significantly over the past year, and properties are staying on the market for significantly longer regardless of whether or not they sell. Right now, let's check some house marketing predictions for 2023 to 2025. Numerous predictions have been made about the 2023 housing market, however, most of them are wild guesses. But what about the property market projections for the years 2023, 2025, and beyond? Although it is challenging to foresee the property market over the next 5 years, here is a glimpse of what most experts predict could happen. The highest levels of mortgage rates in 20 years are putting a damper on the housing market and lowering prices. However, many housing markets across the United States have not yet begun to see prices level off as a result of limited supply. The housing market of the next 5 years, according to some analysts' predictions, a decrease in value can only be brought on by an excess of supply. After another year, supply will catch up with demand in the housing market. As long as there remains a shortage of available homes, the seller's market will continue. In the next 5 years, the housing market is expected to level off, with buyers and sellers holding roughly equal power. Instead, the balance of power in negotiations will be more nuanced and context-specific. According to Lawrence Yun, the chief economist for the National Association of Realtors, a national price rise of 15 to 25% is anticipated to occur during the next 5 years. The next year should see a drop, 2024 should see a plateau, and the years after that should see rather strong growth, according to this estimate. Chief financial analyst at Bankrate, Greg McBride, forecasts a mid to low single-digit yearly return from the U.S. real estate market over the next 5 years. It is good knowing that over the long term, investments in real estate typically provide gains in excess of inflation. The longer the time horizon, the more confident we can be in the market's long-term trend of upward movement. Goldman Sachs predicts that U.S. house prices would drop by 5 to 10% during the course of next year. Goldman Sachs predicts the housing market will bottom out in late 2023. It is not expected that prices would rapidly reverse, as they are forecast to level off and remain relatively constant until roughly mid-2024. A slowdown in the housing market might be absorbed by strong household finances and a relative lack of available homes in the United States. Because a recession would likely be light, the housing market is tight, mortgage quality is excellent, and the vast majority of mortgages have a fixed interest rate. Analysts believe a huge wave of forced sales is unlikely in the United States. Rates for 30-year fixed mortgages will hover at 7% through the rest of 2022, and the majority of 2023. The following 2 years should see rates between 5.5% and 6%, barring any big shocks. The residential real estate market has shown bubble-like traits, although most experts do not expect a crash. But housing slowdowns caused by higher mortgage rates tend to weigh on GDP by lowering residential investment and weakening consumption. According to Zillow's study of home price estimates, buyers will have the upper hand in the housing market by the year 2023. As a result of prospective home purchasers being priced out of the market, the panel expects rent growth to outstrip inflation over the next 12 months. When do panelists expect the housing market to become more favorable to buyers? 5/6 of the experts on our panel anticipate a dramatic improvement for purchasers over the next 12 months, sometime in 2023. All 107 participants in the study expected housing prices to fall in 2023. Over the past 3 months, the percentage of panelists who worried that they were being overly optimistic about the future increased from 56% to 67%. An additional 24% anticipated the housing market transition to occur in 2024. There will be a buyer's market in 2025, according to 13% of people. While only 8% believe it will occur before 2026 or even within the next 5 years. Cities in the South and Midwest have the lowest probability of experiencing price drops in the coming year. Prices are more likely to fall in tourist hotspots. Over the coming year, rent increases and inflation are expected to surpass gains in stock prices and property values. In which areas will house prices increase the most in 2024? According to Moody's Analytics' most recent proprietary housing analysis, which Fortune magazine requested, home prices will increase by 0% in 2023. Which is a significant decline from the housing market's 19.7% price gain over the previous 12 months. Experts, however, expect huge pricing discrepancies across the country. The Financial Intelligence Organization estimated the movement of property values in 414 local housing markets between the fourth quarters of 2022 and 2024. Moody's Analytics forecast model projects that, of the 414 major housing markets in the United States, 210 are likely to see home prices fall over the next 2 years, while 204 are likely to see home prices grow. This is the end of the video. Do not forget to like the video, subscribe, and comment down what you think about this video.